Ladies and gentlemen, good day and welcome to the Q4FY22 earnings conference call of Mrs. Bectors Food Specialties Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. I now hand the conference over to Mr. Anup Bector, Managing Director and Promoter. Thank you, and over to you, sir.
Yeah. Good afternoon, everyone. I am Anup Bector, Managing Director of Mrs. Bector Food Specialties Limited. I hope that all of you and your families are safe and healthy. On behalf of Mrs. Bector Food Specialties Limited, I extend a very warm welcome to all participants on Q4 and FY22 financial results discussion call. Today on this call, I have with me Mr. Manu Talwar, Chief Executive Officer, Mr. Ishan Bector, Whole-Time Director, Mr. Praveen Kumar Goel, Whole-Time Director, and Orient Capital, our Investor Relations Consultant. I hope everyone had an opportunity to go through our investor deck and press release that we have uploaded on exchanges and on the company's website. Before discussing our Q4 and FY22 results, let me use this opportunity to introduce our new CEO, Mr. Manu Talwar. Mr. Talwar has over 30 years of proven business leadership exposure in profitable business expansion, operations, and general management, primarily in consumer-facing industry. He is a chartered accountant by profession who moved into business management with Coca-Cola in year 2000, and after working with Voltas and Pepsi in finance stream. He was leading South region after working North and East before he moved to Bharti Airtel as CEO of Mumbai and Maharashtra Circle. Telecom journey continued with Viom Networks till 2013, and then he took role of CEO of Luxor Writing Instruments Private Limited. He has managed tough times during Coca-Cola, pesticide scare 2003, Viom telecom license cancellation, and managed business turnarounds and transformations. He has also the experience of working with new age company Lenskart during its high growth phase. His diversified and great deal of experience would help the company to achieve its vision and create wealth for its valuable stakeholders in the long run. Overall, FY22 was a challenging year, and we witnessed unprecedented challenges in the business environment. But the company has been successful in mitigating them and managed to post an annual revenue growth of 12.2% in FY22. The company continues to see strong growth outlook in both its biscuits and bakery segments. The company is one of the largest suppliers of buns to quick service restaurants, chains in India, and its bakery brand English Oven is one of the fastest growing brands within the premium bakery space. Despite of the challenging macro environment, the company is trying hard to strike the right balance between scale and profitability. Dependence of any single category has never been a winning formula for any consumer company. And we focus to add new products in our both business segments during the year. Given the nascent stage of the packaged food industry in India, we believe in focusing on high gross margin through premiumization. Company is further focusing on technology to drive efficiency both on sales and supply chain side. Hence, company has initiated to implement Salesforce automation and distributors management system, which will help us to drive availability, market share, and premium outlet reach to improve sales efficiency. The company with a large presence in North India is currently looking to expand reach in its existing markets and gradually explore newer markets. It is in the process of expanding its Rajpura facility in Punjab and has plans to set up a greenfield facility in Madhya Pradesh to cater to the West and South India. During the year, the company has taken various right steps. Number one, to expand its distribution reach in existing markets and enter new geographies. Two, building management strength by hiring of senior professionals in operational, sales, digital, and IT, and on the human resource front. Number three, enhancing capacities to capture market growth opportunities in existing market and new geographies. During the current quarter, we continue to witness inflationary pressures on our key raw materials and our other expenses, and we expect inflationary trend to continue in the next 2 quarters because of geopolitical concerns and supply chain disruptions. Thereby, we are focusing on improving price realization as well as cost efficiencies. We would continue to seek a balance between growth and profitability through our diversified portfolio actions in domestic and export markets in the biscuits and bakery categories, both for domestic and exports markets. Going forward, we will continue to focus on premiumization and consolidating our market share through brand awareness, both digitally and in retail stores through in-store branding exercises, and aim to cater to wide variety of retail customers by introducing new niche products with a target to expand distribution network and increase penetration in Tier 1 and Tier 2 cities. We plan to focus more on digital marketing initiatives such as social media, integration, influencer marketing, and content marketing. In terms of the new capex, the company has started investment on another biscuit line from the IPO proceeds of 40.5 crores to finance the cost of the Rajpura expansion project. And the commercial production for this plant has started in the month of May 2022. As communicated before, for bakery plant expansion in Mumbai, the company has purchased land in Khopoli, adjacent to our current factory. The total project cost is estimated to be at 73 crores, including land, out of which 25 crores will be invested in FY23 and balance in FY24. Commercial production is proposed to be started in October 23. Now I will discuss the Q4 performance. The consolidated revenues for the quarter stood at 252 crores versus 224 crores in Q4 '21, registering a growth of 12.6% on a year-on-year basis. On the biscuit side, our biscuit segment reported a revenue growth of 4.3%, which stood at 143 crores in Q4 FY22 as compared to 137 crores in Q4 FY21. This segment has grown by 27.2% over Q4 '20. Our domestic biscuit segment has witnessed higher single-digit growth in Q4 '22 as compared to the same period last year. On the bakery front, bakery segment revenue stood at 95 crores against 75 crores in Q4 FY21, thus registering a growth of 26.8%. Including retail bakery and institutional segment. Bakery segment has grown by 40.8% as compared to Q4 FY20, Both retail and institutional bakery has grown by high teens in Q4 22 as compared to the same period last year. We continue with our brand promotions in various e-commerce channels for biscuits and bakery products and are listed with leading e-commerce platforms in India. The company continues to witness cost pressures in India. The company continues to witness cost pressures in prices of raw materials. As a result, both gross margins and EBITDA margins saw a decline of 50 bps and 300 bps points respectively and stood at 44.9% and 10.1% respectively. Profit after tax for the quarter stood at 10.2 crores versus 12.2 crores last year. PAT margins for the quarter stood at 4%. Now coming to our 12-month performance. FY22 consolidated revenues stood at 988 crores versus 881 crores, registering a growth of 12% on year-on-year basis. Revenues from biscuit segment have grown by 3% to 592 crores as compared to 574 crores in last year. Revenues from bakery segment have increased by 31% to rupees 339 crores as compared to 259 crores in FY21. EBITDA saw a degrowth of 13% Y-on-Y and stood at 123 crores. Our EBITDA margins for FY20 was 12.4% as compared to 16% last year. Profit after tax stood at 57 crores versus rupees 72 crores in FY21. PAT margin for FY22 was 5.8% as compared to 8.2% last year. I would like to mention the main reason for reduction in PAT as compared to last year is due to the entry tax provision reversal in the last year amounting to rupees 5.5 crores. Also during the year, due to COVID-19 pandemic, the company witnessed some expenses were lower than usual in the previous year. The company has also declared final dividend of 1.25 per equity share. With this, I would request to open the floor for questions and answers. Thank you so much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Nidhi Babaria from Dalal and Broacha Portfolio Managers. Please go ahead.
Hi, sir. Thank you for taking my question. Sir, I wanted to ask that in this quarter, our gross margins were pretty decent, while our EBITDA margins had gone down significantly, even on Q-on-Q basis. So, is this because of some expansion cost which we had incurred, which is leading to reduction in EBITDA margins?
See, our gross margins, as you rightly said, vis-a-vis FY21, which was 47.6%. In FY22, it was 44.2%. In Q4, if you look at Q4, this was for the year, but in Q4, if you look at, our last year margins were at 45.4%. Now they're at 44.9%. So we have actually been improving on our gross margins because this has been happening due to increased prices which we have been monitoring, managing from the market. However, we have seen some cost increases. Especially there have been cost increases which have come in other expenses, which have come in due to increased fuel prices, increased transportation costs, on logistic costs. So that has been one thing. I mean, on certain costs, we have managed savings, but on certain costs, we have had a big hit, especially on account of fuel and travel and transport. So if you look at on the overall side, this is for everyone. I mean, on the drop of gross margin, we have dropped by 3.35%. This is due to raw material prices, specifically on the gross margin side. This quarter, this 3.35% drop has been now moved to 0.47%. Our EBITDA drop has come down to 3.62% in the year. However, for this quarter, it is at 2.97%. The drop has been because of raw material prices, fuel, transport, and also employee costs. On our PAT side, the drop seems to be a bit higher because there is a provision of 5.5 crores which have come in because it was a one-time expense. Now, what has gone better for us is that in the FY22, we have seen our employee cost has come down. But in Q4, our employee cost has gone up. This was because of certain one-time expenses which have come in. We have been talking about digitalization on the sales side front. So there has been recruitments due to field force recruitments, since we are putting in field assist. We have put in a lot of frontline workers which have come in this quarter. Their effectivity could not be shown because they were under training. And also there were certain one-time payouts as incentives which have come in this quarter. So that has been the reason why our employee cost in the Q4 is looking a bit higher. And on the other expenses, which are looking substantially higher from 18.4%, we are looking at a 20.3%, which is like a 2% higher, is because of the fuel, transport, and travel expenses. So this has been the reason, why the EBITDA margin has taken a bigger hit than the gross margins.
Okay. And sir, if you can give some color or guidance on how this quarter, on absolute basis, what was the portion of investments or expenses done towards the expansion side or adding distributors or any of those side?
Yeah, so we have worked on distribution, and what we have done is, on the ADSR front, right, we had 65 ADSRs when we exited in December quarter. In March quarter, we have moved to 266 ADSRs. That is why you are seeing a higher increase in the cost. Our distributors, we have increased our distributors from December quarter, which was at 527 distributors. We have moved to around 543 distributors, So there is a continuous effort because once these ADSR recruitment had started, there is a complete working being done on increasing distribution. And I would like to mention that our field assist has finally, been effective from June. And we are able to now collect each information about the shop, about the outlet, about what he is selling, what time is he reporting. So effectivity of our sales distribution team should be seen as much, we should get much better results from our sales team. So this is on the distribution front.
And what would be our cost per ADSR? Like rough numbers, not the actual.
Can you say again?
What would be the cost per ADSR?
See, this cost is a very interesting thing. Earlier on, we had 300 people approximately. Now I'm giving an approximate number. We had approximately 300 people working on our roles. Mm-hmm. But now the ADSR were not working on our roles. They are working on distributor roles. Right? So, we would be supporting the distributors till the time, effectivity starts coming in. So what is going to happen is most of the people who are on our rolls will continue to reduce and our ADSR will continue to increase. ADSR normally depends on which city is working. On a rural area, the ADSR cost is much lesser. And when he's in a bigger city, a tier 2 city, it's averaged out. But effectively, you can count around the 12,000-13,000 rupees, whereas our person costs much higher.
Okay. And sir, on demand side, biscuit demand side, like I was just seeing our Q4 overall biscuit sales are up by 4%, where our competitor is up by almost 15%. So are we losing any market share, or is it the premium segment which is a bit lackluster as compared to the basic biscuits?
No, there is nothing like it. There was, specifically, we had worked out that, since you have seen that all raw material prices were at a on the very higher side, it was very important to, reduce your stocks in the market and work towards bringing in better efficiencies in the system. So that is the reason. Otherwise, as per our report, we have not lost any market share. In fact, our position as of date is much stronger than what we were earlier. So, effectively, what has happened is our secondary sales are much higher in the quarter than our primary sales. So, there has been an effort by the company that, since we are at the peak of the raw material prices, we should not be having excess stocks in the market. So, so that is the reason. So we brought in better efficiency. Not that we had excess stocks, but we brought in better efficiency. So that could be seen as a slower growth number. Yeah.
Yeah. Mm-hmm. And sir, if you can also give some breakup on our domestic sales versus export sales, and in bakery again the bakery portion and the QSR breakup.
See, both our sales are doing extremely well. And, I've already mentioned on the growth numbers, future numbers for us are looking bright. We are looking at, around a 13-14% growth numbers going forward. And, both the export side and the domestic side, we have to create a fair balance where, our profit margins are also work out well for us. And and growth stays intact. So I'm sure, in the next year or the coming year, we would be able to show you a 14% growth numbers for both our businesses.
From this quarter or second half of this year?
Even we are seeing, even the biscuit side, sales normally start peaking till October, November. So April onwards, the season starts looking brighter, peaks by July, and it goes down till November. And with the increased distribution numbers which we are working on, and the investment what we have done on our IT systems, which is specifically on our sales digitalization, I think we would be seeing good numbers coming in.
Okay. And sir, what amount of price hikes have we done? Just this last question. Just this last question. Sir, if you can just give a color on price hikes that we have done in this quarter, and what kind of price hikes do we expect in all our segments in coming quarters?
What we have seen this time, it's the first time in our history that once, normally it used to be one price rise and we used to adjust the price. But over here, every quarter we are adjusting our prices. We are working towards how to cover up the inflation. And in fact, certain part of this is still lying pending, which is happening in this quarter. So, things get impacted before and we have to move afterwards, We cannot move before the inflation has hit us. And but overall, our company has been able to do a good job. We have recovered our costs much better, and we have brought in a lot of efficiencies in the system, and we will continue to bring in a lot of automation, better systems, better efficient, better plants, which can bring in lower costs for us. So this is a crisis period, especially because of the Ukraine-Russia war, where Ukraine was a very large producer of both wheat and of oil. So the impact has been there, but our company has done a fairly good job. You are already seeing it in the Q4 raw material prices, and so effectively I think we've done a very good job. I mean, on the biscuit side, our realizations have got better. On the domestic side today, we are able to realize approximately to around 90 rupees a kilo. And on our export side, we have done fairly well, where we have increased our realizations, which have come in Q4. I'm talking about Q4 numbers at the moment. So approximately 10% in the domestic side and around 15% plus in the export side. So certain price rises are still lying pending for us, like CSD is lying pending for us. So there are certain areas where still, work is happening.
Okay. Thank you, sir. I'll come back in queue.
Thank you very much. Our next question is from the line of Sai Prasad Prabhu from Bajaj Holdings and Investment Limited. Please go ahead.
Hi, sir. Just a couple of questions from me. You mentioned about, biscuits growing 4%, and in the presentation it was mentioned that domestic biscuits has grew by mid-single digit. So just wondering if, exports were flattish this quarter, and if yes, then what is the reason for it? Is it the price hikes which you have taken?
Yeah, you are absolutely right. Exports were flattish because there were logistic issues, on the shipping front, and so there had been exports for Q4 have been flattish. But as an information, for the whole year they grew by 17%, which is a very good figure, and so export continues to do well for the company. And we are seeing considerably gains coming in going forward.
Yeah, so on a full year basis, if it has grown 17%, next year on this high base, do you expect exports to maintain that 13-14% growth? Is what my question is.
Yeah. We would definitely, the company's export team has worked very well on this, and we are looking at a 14% growth numbers going forward.
Okay. Secondly is on the inflation. Overall on your raw material, how much inflation are you seeing in 4Q?
See, as an individual, it is very difficult to bring in, on a quarter by quarter basis. But like I mentioned earlier to Nidhi's question also, my gross margin, which is the raw material to my sale price, in FY22, FY21 was 47.6%. And in this year it was 4.2%. So there was a drop of 3.35%.
Correct.
But in Q4, this drop was only 0.47%, because in Q4 FY21 it was 45.4%. And we have this year brought in 44.9%. So effectively, the drop has been reduced drastically and has been brought down to 0.47%.
Okay, and you plan to maintain it in the Q1 and Q2 as well, at least quarterly, sequentially?
So our focus is very clear to, have a profitable and a sustainable growth. So it's not only about growth, it has to be a profitable growth. And we continue to do so. And, we expect things to get better and work towards it.
Okay. On the employee cost, you said that there were certain one-time expenses. So, and you have added a lot of sales force, even management level. So, what I wanted to ask is if sequentially this employee cost is going to remain, or we may see some dip from current levels.
No, you will see a considerable dip going forward because there were certain one-time expenses which had come in, and you will see a dip going forward because the company's strategy has changed. We are having frontliners who are going to be not on company roles. But company currently was supporting them because those people have been on training. As the company has also maintained its own people because till the time the people, ADSR who are on distributor roles take over, we cannot move our people to distributor roles. And so therefore, both costs have got booked up. And also we had some certain incentives which, came in the last quarter. And so that is the reason. Otherwise, you will see a dip going forward.
But sir, then your distributor cost will go up, right? Why will the distributor then?
No. Distributor cost will not go up. I'll tell you the reason for that. It will be at very, very small places where we might have to support this. Areas where we are opening new people,
okay.
New distributors are being appointed. Let's say, if you have to appoint distributors in Bombay, right?
Yeah.
We do not want people to be at our roles because our role people are always going to be 30-40% more expensive than the distributor roles, right?
Correct.
So effectively there will be 100% savings which will be coming in. Efficiencies will be coming in because of the IT tools. Because earlier we were working on a homegrown tool which could not support today's requirement which our business needed. But we have now gone in for field assist, which is actually giving us information what the biggest competitor is getting information. The same sort of information we are having today in our in our system. So there is going to be definitely better efficiencies coming in going forward.
Okay. And my last question is on the fuel prices. You said that fuel prices and logistic cost have resulted some dip in EBITDA margin. So if I can ask, what is the percentage of sales and how it has changed quarter on quarter in Q4? Like of the 200 bips impact you had on EBITDA margin, so how much would have come from this logistics and fuel prices?
See, on my other expenses side, there has been a 2% increase. Now, I do not have it as a separate on the fuel and the transport, logistics side and travel. But however, I can just see if my support team can help me. So power and fuel actually is a 1% increase, which was earlier at a 4%, and this year is at a 5%. But what we are seeing is that in Q4, I have annual figures, right? And on the Q4 number, which was earlier at 4%, is now Q4 at a 5%.
And logistics would be?
Logistics, I'll just give you, if my support team can give me, hold on. Yeah, so from a 7.5% last year, this quarter we are looking at a 8.81%.
Okay.
Yeah.
Yeah. That's it for my side, sir. Best of luck for your future growth, sir.
Thanks.
Thank you. Ladies and gentlemen, in the interest of time and fairness
to all participants. Let me be correct. Mr. Prabhu, it's okay. Sorry, yeah.
Ladies and gentlemen, in the interest of time and fairness to all participants, please request questions to 2 per participant. Our next question is from the line of Percy Pantaki from IIFL. Please go ahead.
Hi, sir. Your overall biscuit growth for the full year is 3%, and you mentioned that exports grew for the full year 17%. So the domestic biscuits declined by about 5 to 7% for the full year. Is my calculation correct?
Yeah, you are right.
And what would be the reason for this?
See, in fact, in the last quarter, we have taken a dip and the dip has necessarily happened that since there has in the year 2021, it was a COVID year where sales were aggressively higher. We all know about it, and we should try to remember where pantry loading was extremely high. So that is one of the biggest reasons for the growth, to come down. And what 5% what you are seeing is because of the pantry loading which happened in 21. But like I mentioned, we have had great growth going forward in the 2 years, numbers, which is at on the Q4 side alone. Growth over FY20 Q4 is 27% of our total business. If I see what is my growth over FY20 to 22, it is at a 27%. So we have grown at 13.5% year on year. In Q4, our growth has been at a 4%. And I would actually correct it, because in the Q4 I mentioned exports did not were flattish. In fact, domestic biscuit business grew by 8% in Q4.
Right, sir. I just wanted to understand in biscuits on our distribution front. Can you share some numbers in terms of total number of outlets, both on direct reach as well as including the indirect reach? How much has it grown compared to 12 months earlier?
You know what? Actually, what has happened is our growth numbers are coming, but they're more coming on our quarterly basis, right? Why so? I'll tell you. Our sales digitalization, which we used to call it TARI, actually was discontinued by the month of February, because when the existing person came to know that we are moving to a more professional, a more trustworthy system, as in field assist, we stopped getting support from outside, because this was a small company which was, providing us help. So currently what we are seeing is our growth numbers are coming well. And as I mentioned earlier, this field assist is already working online. May we have seen good results. June we will now be 100% on it, and our numbers will start coming in more intact. But what we saw in the last quarter, now as a direct reach, I think we increased our numbers. Just a minute, please. Let me go to my paper there. So, but I would really tell you, please, that these numbers are going to be more exciting going forward, and because we are going to get hold of field assist now, because there were certain small improvements which were needed, which are already happening, and effective June, I think we would be able to share the exact numbers with you going forward.
And sir, lastly on cost FY23,
we will be able to give you percentage improvements in our system.
Sure, sir. On FY23, if I make a simplifying assumption that the input cost remains constant at the current level, what kind of EBITDA margin for the company as a whole would you target for FY23?
We have always looked at a 14%, which is the right number for us, and we will stick to our numbers of 14%.
Okay, sir.
And this year, as you have already seen, we came to it at 12.4%. This was actually the worst of the times we faced, and it took us time to increase our prices. So we would still give our we would work towards the 14%.
Right, sir. Actually, one more question on the B2B bread segment for the full year. What has been the growth?
So we have seen considerably good growth numbers coming there. There are double-digit numbers, and so B2B business continues to do well for the company. Not only are we working today with the current companies with whom we were working, we are also adding newer companies. We are also adding newer products into the B2B B side of the business. So this business should be outperforming itself.
Okay, sir. That's all. Thank you.
Thank you.
Thank you.
Our next question is from the line of Digant Haria from GreenEdge Wealth. Please go ahead.
Yeah, hi, sir. So first question is, after the appointment of Mr. Talwar, how will be the responsibilities or, split between, you, Mr. Talwar and Ishan? In general, I'm just trying to understand that, how will, this new appointment help us scale better and focus on more things?
So, Mr. Talwar brings to the company a lot of experience, and a very large experience from Coca-Cola to, telecommunication to a family-run company, and then finally a fresh startup, which has been one of the most dynamic experiences. Our company has to have a changeover, and has already started its process since last year, working on digitalization. Not only digitalization in the sales side, in complete, automation on the production side. And so I think Mr. Talwar is going to be leading the operation with, Ishan actually directly, Ishan on the bakery side and Suvir on the export side, reporting directly to him, and Manu reports into me. So effectively, Manu is going to be responsible for, giving us better margins, better systems, more digitalization. So, overall, he will bring in a lot of resource to the company. He has just joined us a month back. It's been around 40 days. And going forward, I think he shall be more interacting with you than I would be interacting with you. And so he is going to be responsible for the operations of the company.
Okay, right, sir. So surely look forward to him being on the call later, later in the year. So, sir, second question is, sir, on this, institutional bakery. In the last call, you had said that we fix our prices in the month of March or April with all our vendors, which are McDonald's or Burger King.
I didn't say March or April. I said in the first quarter.
Okay. So now how does this work? Like, because we fix the price for the whole year, and with this uncertain situation, what is the pricing strategy you are adopting this time? Because earlier years it was fine.
No, it stands the same. We because of our large relationships, it is more about predictability. So our customers like predictability. So we have a price correction which happens once a year, and but then we also block that raw material for them for the whole year. So there are no shocks which can come in either to us or to them. So the wheat, the oils, or the other things. I mean, not exactly the oil currently, because oil is already at a peak, and so the blocking happens, and we are expecting the price rises are already in the final discussion. We're expecting to get them in the next few days.
Right. So, and just in the year when COVID hit us, which is financial year 20, we did revenue of say 130 crores in the institutional bakery division, which fell down to say 75 crores last year. So this year, have we crossed 100 crores, or we are still, far away from the all-time high of this division of 130 crores?
I would not have the figure with me currently, but the sales of the B2B businesses are actually doing very well, and I think they would surely cross the numbers what you're mentioning.
Okay, sir. So fair to say we would have crossed pre-COVID levels in this division also. Okay.
Yeah, I think so. We have crossed pre-COVID levels, but the businesses are doing well. They're very positive. I think people are moving towards more organized retail, more B2B or in a good format, and so they're doing very well. B2B is doing well for us.
Okay, sir. Okay, sir. And last question is that, in the last 4 years, we have almost spent, say, 370, 380 crores in terms of upgrading or building our manufacturing capacities and, building capabilities. And in the last 4 years, we haven't generated cash flow, which is, 380 crores. So, a lot of that money has come, obviously, some of it has come from the IPO and some from our internal generation. Now, we have created so much. So what's your outlook on, say, next 2-3 years? Will our cash flows be significantly better? Like, I understand inflation plays a spoil sport this year, but otherwise, when you say 14% margins, is it possible that, in a stable year, we do even more? Because, we did around 16% margin in the COVID year as well.
Mr. Haria, this is the operator.
So look at our cash flow from operations, have always been quite decent. In FY21 it was at 110 CR, and this year we were at 84 CR. Our net debt to equity ratios are at a 0.1. So, we are effectively getting better. I mean, if you look at my working capital days, they are getting better. Other than, we see in stocking, we have some higher stocks because these are opportunity stocks which have been created, and whenever there's a need, we would dilute these stocks. But effectively, the company is in a very, very strong position and is also taking up certain projects, like we mentioned about, the project which we had started, for IPO proceeds at a 40.5 CR. I think that has already started working. So it has been affected from May onwards. And we are also, doing certain other expansions. It is not about expansion. It is about creating the most lowest cost production base for the company. So we are working towards, shifting 2 of our lines from Taliwal to Rajpura and making Rajpura as the largest base of production for, Mrs. Bectors Foods, because of certain issues which are like very, very high transportation costs, what we have already seen, labor costs, other efficiencies. Taliwal plant was around a 14-year-old plant, and considering the gas prices today, we wanted to bring in better efficiencies. So what we have seen is investing around 50 crores of rupees, there is a clear generation of money, which comes in from here, and the unit actually pays back for itself 100% in the 4 to 5 years time, So certain investments on the biscuit side are these. On the bakery side, the company is looking at Bombay as a great opportunity going forward. The land has already been bought. The plans have been finalized. We are about to finalize the equipment. And this year we are looking at investing 25 crores. Next year would be the balance amount of the 73 crores what we are looking at investing in this total project. In fact, when you look at the size of the building, like 73 crores when I'm talking about, the complete infrastructure is being looked at for 3 lines. But we will initially be putting up 1 line. So, for the next 3 years or 4 years, whenever new lines are coming up, the cost of the project will significantly reduce. And same is the case where we are actually putting 50 crores for 2 lines. Actually, the building and the infrastructure is being created for 3 lines. The 3rd line will actually come out at a much, lower cost. So, this sort of investments are happening, and the company, other than building capabilities, capacities, is also bringing in lower cost productions, that you save immensely on the cost to produce. So which will go a long way for the company to improve its profitabilities further.
Right, sir. Thank you so much for your detailed explanation. All the best.
Thank you. Ladies and gentlemen, in the interest of time and fairness to all participants, please limit your questions to two per participant. Our next question is from the line of Prithvi from Unifi Capital. Please go ahead.
Thanks, sir. I just have a couple of questions. The first one on the inflation side for biscuits. What has been the raw material inflation over the last 12 months, and what has been your price hike? Could you quantify both the numbers?
Actually, like I said earlier, it's very difficult for us to quantify the numbers because, inflation is not, it is dynamic. It just keeps changing. And along with the inflation, our price rises are changing. Now, what is important to see is when you're talking about raw material, like I mentioned in FY21, our gross margin was at a 47.6. In this year, it is at a 44.2. So clear cut, there was a 3.35% drop. So the raw material prices increased. The company could not manage the complete price rise in the full year. But as time passed, in the quarter 4, from 45.4%, we have brought it up to 44.9%. So effectively, the difference now is only 0.4% drop. So, the company is working on it, and this is the most important thing, for the company is to, work towards, the right gross margin and to drive an EBITDA margin of around 14%. And the company today is very well placed. There are certain other price hikes which have to happen, which are happening in the first quarter. They should be over by end of June. But also there are certain price rises which will take another 1 quarter or, approximately another quarter, where it's like CSD, the canteen stores department, where our price rises are still pending with them, and we expect them to take another 3 months' time, for the price rises. So effectively, our target is to get an EBITDA of 14% and work towards wherever there are price rises happening on the raw material side. We cover them with either through price increase or through bringing efficiencies or cost cutting, and that is the way forward for us.
And coming to the export biscuits, obviously you mentioned on a container shortage, etc. So how is the situation now? Is there any order book for you on the export side?
See, normally what happens is in the last quarter, every company is fulfilling its targets, So there was a shortage for some time, the last 20 days. But otherwise, things are okay now. Things are more than normal. There is no shortages. And so going forward, we are looking actually at some benefits coming in from the shipping costs also. But right now, we do not have any challenges on availability of containers.
And just a follow-up, so what kind of growth you are looking on the export side?
See, I told you overall on the company side, we can do anything above 14%, So the numbers for us in the last 2 months are looking positive, and, the growth numbers seem to be going good.
So just one bookkeeping question. In this quarter, employee plus other expenses is almost 88 crores. And you mentioned there are certain one-offs. Could you quantify that one-off number?
See, it will be difficult to quantify exactly, but I would say, can we give it as a percentage? The cost of employees, the other expenses, the employee cost, the employee cost. 1%? Maybe. So it's now from a 13.9 to 14.5. If we look at the annual figure of 13.9 to 14.5, in fact, last year it was 14.4, where the whole year cost has come down to 13.9. And in the last quarter, it was 13.9, so it was 13.9, now it's 14.5. So you can expect around a 0.6 to 7%, numbers which have come in as a hit in the last quarter.
Thank you, sir. That's all from my side.
Thank you. Our next question is from the line of Alisha Mahawala from Envision Capital. Please go ahead.
Hi, sir. Good evening. Thank you for taking my question. So just wanted to understand that in this quarter we've done about 10% kind of EBITDA margins, and you did mention that considering inflation, geopolitical issues, etc., and some price hikes still remaining, do we expect the pressure on margins to continue in H1, and do we expect the 10% to be the low, or can margins go lower in the near term?
So I don't think so 10% is the right number. The numbers are going to be better than this. And so effectively, like I mentioned, we are looking at EBITDA margins at anything at approximately around 14%. And, on the full year basis. And we do not look at any challenges in that regard, because most of the, raw material prices have gone up. We are looking at now prices to actually going forward in the next, after 2 quarters, to, settle down. And, we could look at certain benefits coming in. But we are quite hopeful that, anywhere between 13.5 to a 14%, we should be able to manage on the EBITDA side.
And this aspiration of 13.5 to 14, are we expecting this in 23, or will it take 2-3 years, considering there is going to be some amount of cost upfronting that we are looking at?
No, I'm talking about numbers for this year. I'm not talking about 2-3 years. I'm talking about numbers this year.
Sure. And just one more clarification. Our bakery business grew at a much faster pace compared to the biscuits business, yet there was such a high impact on the margins, despite bakery being the better margin business. Can you help us understand why?
I need to know your question again.
The bakery business grew at 26% in the quarter versus biscuits, which grew at 4.5%. Normally, bakery is a better margin business. So if that is outpacing the overall growth, the margin should be slightly better. Just wanted to understand. Because margin was extremely low in this quarter.
As a multi-product company, these are certain safety measures which every company has, So certain businesses are doing better, certain businesses, need infrastructure development. So biscuits, like what we have seen, it's been a year when we had our IPO last December 21, and we have continuously worked on, making our company into a competitive mode with the largest biscuit company, and we are working well towards it. We are seeing our premiumization paying off. This year also, only in our GT business, we have seen our premiumization growing by 3 to 4%. But in case we look at our modern trade has done, well for the business, and has grown by around 45% in the full year. So, this is showing the strength of the brand. So, effectively, we are looking at, our businesses to get premiumization, to be a strong player in the modern trade, because modern trade for us is a smaller part of the business currently, but has immense potential, and our biscuits are well accepted in modern trade today. So, effectively, we are going to be looking at premiumizing, cost cutting, and also doing price corrections for the market. So effectively 13.5 to 14% is, what we're looking at.
Sure. And just one last question. What has been the ad spend in this year, and what are we expecting it to be next year?
So our ad spend, overall, we have been spending around 8% on ATL and BTL activities. And, this year we have worked at around approximately around a 2% ATL, and more has been on BTL, 6% on BTL. because we need to increase our distribution. So we need in-shop activities more, but current overall spend is standing at 8%.
And it will be similar in 23 also?
Yeah, absolutely similar, but could be the movement happens from BTL to ATL.
Okay, thank you.
Thank you. Our next question is from the line of Gaurav Gandhi from Glorytail Capital Management. Please go ahead.
Thanks for the opportunity, sir. I just want to ask that what is the possibility of institutional customers not taking the contract ahead with us? I mean, do we face any kind of risk there? I mean, competition risk or any other risk there?
No, can I get your question again, please? I'm so sorry, Gaurav.
I mean, what is the risk we face or the possibility of our institutional customer not taking the contract ahead, say next year, or is there any kind of competition risk we face there?
See, currently, we have been working with our partners, who are important to us for the last 25 years. And we have never had experience anything like that. And, very, very ethical ways of working our partners have, and so do we have. And everything is discussed at the highest level. And this is a strategy, a plan. What is their cost going to be? How are they going to take their price increases? So it's a complete business, where we, as an important part of their business, we help them, be the best in their cost. So, so there is no reason for anybody to backtrack or anything, and we've never experienced anything like this. And we never, I don't think so, such things can happen, because the contracts are made on a right price, on the right quality of the product, not on any speculation,
And one more, that where do we see our company, in say next 10 years? I mean, how much big it can grow, and how much confident are you of growing it?
We are very confident to grow this business into a very, very strong consumer company. So if you look at all our parameters, they are extremely strong. Our fund generation is good. Our the challenge what the company has faced in the last year, how the company has been able to come out of these challenges, has invested back on IT systems, on sales digitalization during the challenging times, and also, shown the right results. So the company is very, very confident, and with the growing business and what we are seeing for the biscuit side, increasing our distribution, working on premiumization, cutting down costs, is all, and also on the bakery side, which is growing at such good numbers, we feel that we are in a very, very strong team. And also what you are seeing is professionalism. Today, in the last 1 year, the amount of, new people, the people who are, we have an IT head, we have a new sales head, we have a modern trade strong team. We have now a CEO joined us at the company. So it's going to be a very, very strong, the company is fully geared up to be a very, very strong food company, in India.
Thanks. That's it from my side. All the best for the future.
Thank you. Our next question is from the line of Abhishek Maheshwari from Skyridge Wealth Management. Please go ahead.
Yeah. Hi. Thank you for the opportunity. Just one question regarding wheat. So your cost for the entire year has been booked in May. So I wanted to know, so you already know what your cost inflation in wheat is like. So do you think you'll be able to pass on the entire inflation there to the end customer, or there are some negotiations still happening?
Talking about this, yes, we come to know about on the cost effect, and this will need to be passed on to the customer, and that is okay. I mean, so there seems no challenges. We have already taken this in our EOP plan, so we are okay with that.
So there has been no lag in taking price hike that we have passed on the entire inflation.
See, price rises will happen as per competition. So wheat prices are going to be the same for me or for my competitors, right? So it's not going to be very different. And so all the impacts, come at the similar time. For somebody it comes 1 month earlier, somebody comes 2 months later. But the prices of all raw materials tend to be same for us and the competition. So the necessary price rises will happen, right?
Right. Okay, sir. Thank you. So you're still planning to take some hikes, or you've taken what you could?
We have taken some price hikes in the last quarter, which are going to be happening now. Beyond this, currently we are not looking at anything else coming up for time being, because I think we have covered it well, and we have CSD price rise which should happen in the second quarter. So other than that, we should be able to recover our loss.
Okay, sir. Thank you very much. All the best.
Thank you. Ladies and gentlemen, that was the last question for today. And I would now like to hand the conference over to Mr. Anup Bector for closing comments.
Yeah, thank you everyone for joining us. I hope we have been able to answer all your queries. In case you require any further details, you may please contact us or Orient Capital, our investor relationship partner. Thank you so much. Thank you for joining us in our call. Thank you.
Thank you. On behalf of Mrs. Bectors Food Specialties Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.